Just a few days ago, President Trump posted this on his social media. Within seconds, this spiked a heated debate online. Later, the director of U.S. Federal Housing, Bill Pulte, who is also the guy behind Pulte Homes, confirmed that the administration is considering introducing 50-year mortgages. And of course, many people are saying this is the worst idea possible, while others are saying this may be the solution to solve the home affordability crisis in America. In this video, I will break down the pros and cons of a 50-year mortgage, and we'll look at the 30-year mortgage and compare the difference. And at the end, you can make a decision if a 50-year mortgage is right for you. I will also give you my personal opinion on this. Let's take a look at the history of a 30-year mortgage, because most people don't know that not too long ago, there was no such thing as a 30-year mortgage. People treated debt a lot different than we do today. If your grandparents are still around, go ahead and ask them. They hated borrowing money, and if they ever did, they made sure to pay it back as soon as possible. But that's a whole different topic and not for today. So a 30-year mortgage emerged during the Great Depression as a way to stabilize the housing market. FDR was the president during that time, and this was part of his New Deal policy, which was created to accelerate economic recovery. But before the collapse, a typical mortgage was 3 to 5 years, and homebuyers usually put down 50% or more when they bought a house. Think about it, 50%. And remember, we are talking about a time when a house was worth about 2 times what an average annual income was. Today, an average home costs 8.5 times the median household income. So just this alone tells me that maybe we have a wages and income issue. And if that is fixed, we wouldn't be talking about a 50-year mortgage. So for those of you who don't know, the Great Depression was one of the worst economic downturns in America between 1929 and 1939. So how do you get people to buy a house right after they lost everything? Well, a 30-year mortgage would solve this problem by lowering the monthly mortgage payments so that people could afford to buy a home again. And since then, this has become the new normal. Although some home buyers do get a 15-year mortgage, the majority goes with a 30-year mortgage. And that's because with a 30-year mortgage, your affordability goes up by around 35% compared to a 15-year mortgage. So let's say you just bought a house and you got a 30-year mortgage. On your amortization schedule, you will see that there are a total of 360 payments that you would make if you were to keep that house and mortgage for the full 30-year term. Each month, the payment goes towards the interest and some goes towards the principal. Here's how it looks. So at first, the majority of your monthly payment goes towards interest. And that's because the bank want to mitigate their risk and get their money sooner rather than later. So your principal, also that amount that you borrowed from the bank, barely decreases because only a small percentage goes towards paying it down. It is only at the 20-year mark that the larger portion of your payment starts going towards principal. By the way, in most cases, you can always make additional principal payments, and that will, of course, save you some money on the overall interest that you pay for the whole term of the mortgage. That's, of course, if you can afford to make those additional payments. Most people can't. The nice thing about a 30-year fixed mortgage is that your required monthly payment always stays the same. As your income goes up year over year, your home payment becomes more affordable. However, although a 30-year mortgage makes your monthly payment affordable, it also increases the amount of money you end up paying in interest over the life of the loan. So if you buy a $500,000 home today with 10% down, and the current mortgage rate, at the end of the 30-year term, you would end up paying $540,000 just in interest. Imagine what it would look like on a 50-year mortgage. We're talking about adding 20 years on top of the standard 30-year term, and that's 240 additional payments. So if we look at the exactly same $500,000 home, but with a 50-year mortgage, over $1 million just in interest, and a total of $1.5 million for a $500,000 home. That's considering the interest rate is the same, which in most cases would be even higher than in a 30-year term. But what about the monthly payment? How much different is it compared to a 30-year mortgage? $300 a month? That's it? And that's with the same interest rate. So obviously, looking from this perspective, it does not make a whole lot of sense. You end up paying way more in interest, and it takes a lot longer to build that equity. And that is why so many people oppose this. Check out this recent post on X. They say, how is paying $1.5 million for a $500,000 home solve the home affordability crisis? So you're right. It doesn't make any sense until you add another fact that changes the whole conversation. So the average length of homeownership in America is 8 years. Whether you get a 30-year or a 50-year mortgage, it is very unlikely that you will keep the same mortgage for the full term. I've been in the real estate business for about 15 years now, helped hundreds of home buyers, and maybe one of them lived in the same house or kept their original mortgage for longer than 8 years. We are no longer living in a time where, let's say you buy a house in your 20s or 30s and that's your forever home. It used to be like this, but today, that's just not the case. So that's the one fact that most people miss when talking about this issue. So if you're solving for a lower monthly payment and you know that this is your forever home, then maybe a 50-year mortgage is right for you, considering that your home will continue to go up in value. But what happens if there's a correction and that $500,000 home becomes $450,000 home? Now that's going to be a problem, because if you decide to sell, you'll be losing money. If your goal is to build equity and become debt-free as soon as possible, then a 50-year mortgage isn't for you. Also, if you're in your 50s or 60s and your goal is to buy a perfect home where you want to stay for the rest of your life, then a 50-year mortgage is definitely not for you. So when we hear about the possibility of a 50-year mortgage, it may sound like a good idea at first, since we do need to address the home affordability problem in this country. But I personally don't think that it's the answer for most people. If we start going down this road, we might as well go for a 100-year mortgage. This is not how we solve this issue. So how do we fix it? First, I think the focus should be first on creating better jobs and more opportunities for people to earn more. Our wages have been stagnant for a while, and no, increasing minimum wage by a few bucks won't do the trick either. We also need to improve our education system so that kids graduating from high school are better prepared, having learned valuable skills. Third, I think we need to go back to building starter homes. I'm talking about 800, 900, 1,000 square foot homes. Most people are not having large families today, so they don't need a 4-bedroom starter home. Fourth, there should be no institutional single-family home buying, turning single-family homes into rentals and decreasing housing supply. That's a no-no. Number 5, the $500,000 capital gains exemption should be raised to at least $1 million. And that would unleash more inventory on the market, as more people would be motivated to sell their current home. Number 6, bringing down mortgage rates to at least 5%. That would be a good start. And if we can do 4%, that would be even better. And the last one, number 7, remove unnecessary regulations and incentivize home builders to build more homes. One of the main reasons for why homes are so expensive today is because the builders are passing on their costs to the buyer. It is much more expensive to build a house today, not only because of inflation and cost of building materials, but also because of stupid regulations and zoning laws. Builders are not motivated to build more homes because of how much it costs them and how long it takes to get plans approved. So this is where the focus must be, rather than making 50-year mortgages. For me, a 50-year mortgage is like slapping a Band-Aid on an open wound that really needs stitches. It might stop bleeding for now, but it does not fix what is actually wrong. Remember earlier I mentioned that homes used to cost 2 times the average annual income? And now it's over 8.5 times the income? That's the root of the home affordability crisis. We just can't allow that gap to continue to grow. Eventually, the whole system will collapse. And that's not good for anyone. So, whether you think this is a good idea or just plain lunacy, we all agree that if we don't fix the home affordability crisis soon, we're going to have a big problem. Is 50-year mortgage the answer? Probably not, at least not for me. But we are now having this discussion on a national level, which hopefully will lead to better ideas and permanent solutions. So thank you so much for watching this. I hope you found this video valuable. Please share it with someone and subscribe for more insights. Thank you.